From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 14th, 2015. I hope you had a great weekend, ready to get started with this week's trading. In today's video, I'm going to do a brief overview of each of the major U.S. currency pairs in anticipation of this week's trading. And of course, it's important to note, midweek this week on Wednesday, we have a very highly anticipated, potentially high volatility piece of news with the interest rate announcement out of the FOMC and the Fed on Wednesday afternoon. So we'll want to pay attention to that. Of course, it would be appropriate always to use appropriate risk strategies, stop losses, trade sizes for your trading account, but that especially goes well for this week with the high anticipated volatility. Let's take a look at each of the U.S. currency pairs. We'll start here with the U.S. franc. Of course, over the past several months, we've seen a little bit of a different market overview. We could see the rally higher. It was a pretty strong uptrend going all the way back from here from mid-October. Down into the 9,500 level, took a rally all the way up into the 1.0300s, and then over the past several weeks we have seen a retracement of that uptrend all the way back down to the 618 Fibonacci retracement level at 9,800, sitting just above right now the 100 period simple moving average above 9,800. And you can see today and the past 3 days just sitting inside that green zone above 9,800. So definitely an area that we want to pay attention to. It's an even price handle. That double zero level 9,800. We have the 618 fib of the previous uptrend and the 100 daily moving average. Very significant price level. As long as it stays above that, I would anticipate support, and I don't expect you want to sell it or go short at the current moment. It just doesn't seem like a logical scenario. If you're going to go short, you either want it to go back up or break through this support. That's really the main focus here. So if you're going to go short, it needs to go back up to the last resistance, which will be up here closer towards the 9,900 level. You can see a couple of days ago found resistance there, support here, resistance on the left. So that 9,900 handle easily is your current resistance. Above there, of course, we'd look for the continuation higher. Below 9,800, we look for it to go lower. Lower takes it down, and I'll just pull this over just as a simple viewpoint of where our next support would be. That would be into the mid to low 9,700s, that yellow shaded area. That's assuming, of course, that it breaks through the current 9,800 level. I don't think I need to go down to the 4 hour as this is just an overview, but definitely watching this area today. If you're looking to go long and potentially anticipating the raise of interest rates in the U.S., then you might look for this area 9,800 to be your opportunity to do so for the U.S. franc. Moving on to the euro dollar, similar situation, just flip it upside down. We can see the previous downtrend over here on the left-hand side. We've had a pretty decent correction or rally here for this currency pair back into the 1.1 level, the blue shaded area. Interesting enough, Fibonacci high down to low of the previous downtrend puts the 50% retracement level right at 1.1. So right in the middle of our blue zone, and of course the last 3 days holding resistance there. So again, just the opposite of the franc. I don't think you want to go long here. This is a resistance level. You don't really want to go long. If you're going to go long, it needs to either break above here, 1.1, or it needs to go back down to this yellow zone as your current support. Of course, the next resistance higher would be this purple zone, the 618 fib, sitting up at 111.20. Something interesting that we looked at last week, and of course this moving average has been changed up a little bit. Let me bring up the properties. Instead of a simple moving average, this is an exponential moving average. Just a little bit different math that goes into it, but an exponential moving average, 100 period still applied here on the daily chart. We can see that that sits right there at the 1.1 level as well. So if you're looking to go short in anticipation of the U.S. interest rate change, then this is the spot to do it, expecting it to begin falling back down from here. If you're looking to go long and expect that the market will have an opposite reaction, then of course above 1.1, we look for it to go back up again. GBPUSD, we've seen a pretty significant change already this week where we've fallen from the top of the range from the 1.5240s in the mid to low 1.5200s, now back down towards the 5100 level. Already a pretty significant change for the week. If we look forward to anticipated interest rate news out of the U.S., we might see a little bit further pullback down and even a challenge of our the bottom of our range. You can see the red trend line, the black trend line, We've been studying those in the trade room for weeks now. The two trend lines, top and bottom of what you might anticipate being a range. If we go down here to the 4-hour chart here on the pound dollar, we can see the significant fall that we've already had today from the top of that range in the closer towards the 5200s where the red trend line is. We've already seen a fall back down. If we're going to anticipate a selling opportunity here for this currency pair, I think you're probably going to look for a pullback towards the orange shaded area, the 51.75 or so level. 51.75 becomes the opportunity to go short. Don't go short now. We're into support. You can see the historical resistance back here on the left. We even see some support here. So we're at support right now. Not an ideal time to go short. It needs to go back up before it goes back down again. A breakdown of the blue zone, a breakdown of 5100 likely looks for the continuation of the fall here for the pound dollar today. Moving over to the US CAD, of course, this pair has just been on a run. It's like a speeding train. Nothing really stopping this currency pair. Continues to go higher. We're above the 3,700 level now. So 3,700 would likely be your current support right now. As long as it sits above there, you look for the continuation of the run, likely all the way back up into the 1.3800s. 3850 to 3900 is the green zone. We picked that out last week in the trade room. That would be your next resistance. Back underneath the 1.3700 level, we could see a little bit of retracement. I have not been trading this pair, but if you've been buying it, it's been a clear money maker. I haven't had any clear opportunity to get into this currency pair. USDJPY, significant fall over last week. Significant breakout of our range. The box that you see, the black box you see here on the chart, significant breakout. Even came up and challenged at one time into the 122.30 level last week, and we just see it continue to pressure lower. It's likely this is risk aversion coming up for the U.S. interest rate news. Be careful trading this pair as it's been highly volatile over the past several days. We are at an interesting spot. Fibonacci from the last low to high of this last leg of the uptrend here, from the lows here at 11800 all the way up to the high. Fibonacci there puts the 618 fib right here at the yellow, or just underneath the yellow shaded area. So at least for the day, that 618 fib, the yellow zone, right around the mid to low 120s will be your support. You don't want to go short right now, at least. Underneath there, we might look for it to go lower. But just be cautious on this pair. Again, I think this is likely just kind of risk aversion for the U.S. news that we have popping up midweek this week. So be careful assuming this is going to continue to go down. If that interest rate news does pop up and we get the potential market reaction of strengthening of the U.S. dollar, this would send us right back up again on the US yen. Moving over to the AUDUSD, we can see a little bit of a triangle pattern. We've been studying this triangle pattern here for several weeks in the live trade room. We fell off the top of that triangle up here into the 7300s, took another test, coming back down. Significant level right here in the middle of that triangle. The orange shaded area, 7,200, significant price level. It happens to be also where the 100 daily simple moving average. This is a simple moving average coming into play here, sitting right on top of 7190, 7200. That's where we have found support for the past few days. Zoom it in one time here on the daily time frame. We can see that orange shaded area. That is support. You don't want to go short into support. You want to either wait for it to go back up to resistance, which would be the main focus here, 72.4550, or it breaks underneath our current support and goes back down to the bottom of our triangle pattern, which is all the way down into 7100. So don't go short now. If you're going to go short, wait for it to go back up to 72.45. That's another 40 or so pips up from current market price, or a breakdown of the orange zone. Otherwise, if you're looking to go long, then this 50 or 7190, 7200 level potentially is a support, and then you target back towards 72.45 for the Australian dollar. Back over to the NZDUSD. It's been bouncing around over the past several days, finding resistance. One thing I want to point out here, let's go out to the weekly time frame. Take a look at the long-term trend line, the red trend line there. That's important news for us here on the New Zealand dollar. That's just above current market, closer towards the 6,800 level. I don't know if we're going to make it all the way up there, but definitely something that we'll want to take note of is where that weekly trend line is, all the way up here towards 6,800. We're challenging the 6760 level again. That's the pink shaded area you see on the chart. We can see 1, 2, 3, 4, 5, 6 days out of the past week have found resistance here at 6760 or so. We're challenging that again today. I don't think it's a long opportunity unless it breaks 6760. As long as it's underneath 6760, I think this is resistance, just as it's been for the past week, and we look for it to start turning back down. With interest rate cuts out of New Zealand, potential interest rate raise out of the US, it gives you a bearish bias here for this currency pair. It just hasn't had that headway yet, and the sellers haven't taken control. Watch for that over the next couple of days here for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.